Welcome to Booming Bull Bear, where smart traders are made. Before we dive in, don't forget to hit that subscribe button. Like this video if you find it valuable. Drop your thoughts in the comments and share it with fellow traders who want to win in the markets. The silent killer. Why most traders blow up before they even begin. Listen carefully because I'm about to expose the silent killer that wipes out traders before they even know what hit them. This mistake is the graveyard of broken dreams. And if you don't fix it, you'll join the 90% of traders who fail. Picture this, a brand new trader. Let's call him Alex. Fired up by Instagram gurus, YouTube ads, and screenshots of massive profits, Alex deposits $500 into his broker account. He feels unstoppable. Within minutes, he places his first trade, a small win, then another. His confidence skyrockets. But here's the trap. Alex hasn't built a plan. He doesn't understand risk management. He's trading like a gambler in Vegas, tossing dice and hoping luck favors him. And just like that, after a string of losses, his account is down 50%. He panics. He doubles his position size to win it all back. You already know how this ends. Total wipeout. The silent killer? Trading without a plan. Here's the brutal truth. If you don't have a written trading plan, your exact entry rules, exit strategy, risk per trade, and daily limits, you're not trading. You're gambling. And gamblers always lose in the long run. A trading plan is your shield against the chaos of the market. Without it, emotions take over. Fear whispers, close early before it reverses. Greed screams, hold longer, double down, you can make more. Both voices drag you into disaster. Think of a pilot flying without navigation. They might stay in the air for a while, but sooner or later, they're going down. That's exactly what happens to traders without a plan. Here's what to do right now. Write down your plan. Yes, on paper, define your exact trade setup. How much you risk per trade. Hint, never more than 1 to 2% of your account. When you stop trading for the day, and the conditions that tell you when not to trade. This small shift turns chaos into control. Suddenly you're not reacting blindly. You're executing with precision. Don't underestimate this. A written plan is the dividing line between amateurs who blow up accounts and pros who grow them steadily. It's not sexy. It's not flashy. But it's the foundation of trading success. Because here's the harsh reality. Without a plan, the market will eat you alive. With one, you're already ahead of 80% of traders out there. But here's the catch. Even traders who have a plan still make deadly mistakes. And the next one, it's so sneaky. It disguises itself as progress, while it's actually keeping you broke. The addiction trap. Why overtrading destroys your account. Here's a harsh truth. Most traders aren't losing because they don't know what to do. They're losing because they simply can't stop clicking that buy or sell button. And this addiction is draining accounts faster than the market ever could. Meet Sarah. She started trading with discipline, at least in the beginning. She took 1 or 2 trades a day, studied her setups, and waited for high-probability opportunities. Her account grew slowly but steadily. Then one day she missed her morning entry. She thought, no big deal. I'll catch the next one. Hours passed, and the market kept moving without her. That's when frustration kicked in. She forced a trade, even though it didn't fit her strategy. It lost. Now she wanted revenge. Another trade. Another loss. By the end of the day, she had taken 12 trades instead of 2. Her profits were gone. Sound familiar? That's the addiction trap, overtrading. Overtrading is when you enter too many trades, either because you're chasing losses, forcing setups, or just can't sit still. It feels like productivity, but it's actually destruction in disguise. The human brain craves action. When you're trading, dopamine hits every time you click that button. Win or lose, your brain gets hooked. And just like a gambler at a casino, you start trading for the feeling, not the strategy. But here's the reality. More trades do not mean more profits. In fact, the opposite is true. The more you trade, the more you expose yourself to random noise, emotional decisions, and costly mistakes. Here's how to break the cycle. 1. Set a daily trade limit. Write it into your plan, no more than 2-3 trades a day. Once you hit that limit, walk away. 2. Pre-plan your entries. Know exactly what you're waiting for. If the setup isn't there, don't force it. 3. Use time blocks. Only trade during specific hours. This prevents you from staring at charts all day, waiting for something to happen. The pros don't win by trading more. They win by trading better. They know that patience pays more than action. They understand that one perfect setup can outperform 10 sloppy ones. Think of it this way. A sniper doesn't fire at every movement in the distance. They wait still and calm for the one perfect shot. That's how traders must approach the market. But here's the kicker. Even if you avoid overtrading, there's another deadly mistake that drains traders dry. It's the psychological poison that makes smart people act dumb in the markets. And in Chapter 3, we're going to expose it. The emotional roller coaster. How fear and greed keep traders broke. Here's the raw truth. The market isn't your enemy. The real enemy is sitting between your ears. Fear and greed are the two emotional monsters that secretly control your trades. And if you don't tame them, they'll keep you broke forever. Imagine David, a promising trader. He spends hours studying charts, backtesting strategies, and practicing discipline. On paper, he's got everything figured out. But when he goes live, fear and greed hijack the wheel. One day, David spots a perfect setup. His strategy says, buy now. But fear whispers, what if it fails? What if you lose again? He hesitates. By the time he finally enters, the move is almost over. The trade works, but he makes only half of what he could have earned. Next time, the opposite happens. He catches a winner, but greed whispers, hold on longer, you can squeeze out more profit. Instead of closing at target, he waits, and the market reverses. The winning trade turns into a loss. This cycle repeats until David realizes something shocking. He's not losing because of his system. He's losing because of his emotions. Fear and greed are primal survival instincts. In trading, they show up like this. Fear, hesitating to enter, closing winners too early, avoiding risk altogether. Greed, oversizing positions, refusing to take profits, revenge trading after losses. These emotions turn traders into puppets, controlled not by logic but by impulse. And here's the kicker. The market feeds on emotional traders. Every hesitation, every greedy decision, every fear-based exit, it all transfers. Money from your pocket to those who stay calm. How do you fight back? 1. Set rules in advance. Don't decide in the heat of the moment. Let your trading plan dictate your entries and exits. 2. Use stop losses and take profits. This locks in discipline, so you don't have to wrestle with emotions mid-trade. 3. Track your feelings. Keep a trading journal. Note down when fear or greed made you act differently. Awareness is the first step to control. The greatest traders aren't fearless. They've simply trained themselves to act in spite of fear. They aren't immune to greed. They've just built systems to protect themselves from it. Remember this. The market rewards discipline, not emotions. If you want to level up, your goal isn't just to learn strategies. It's to master yourself. But even if you tame fear and greed, there's another trap waiting. It's not emotional, it's structural. Now I will expose the mistake that drains accounts slowly, silently like a leak in a sinking ship. The hidden leak. How poor risk management bleeds traders dry. Here's the painful truth. You don't go broke because of one bad trade. You go broke because you risk too much on every trade. And this hidden leak quietly drains accounts until nothing is left. Let's talk about Jason. He's sharp, disciplined, and he's got a solid strategy. In fact, most of his trades actually win. But here's the problem. Every time he sees a perfect setup, he increases his lot size. Instead of risking 1% of his account, he risks 10%. One loss wipes out 5 of his previous wins. Jason doesn't realize it, but his account is bleeding, slowly, silently, until one day a losing streak hits and his entire balance collapses. Not because he was wrong about the market, but because he was wrong about risk management. Here's the brutal math of trading. If you lose 10% of your account, you only need 11% to recover. But lose 50%, now you need 100% just to break even. And if you blow 90%, forget it, you're done. This is why poor risk management is the deadliest leak in a trader's career. It doesn't feel dangerous at first. You think, I'll just double my lot size this time. Or this trade looks so good I can risk more. But little by little, those decisions stack up, and one bad trade erases weeks or months of progress. Here's how to plug the leak. 1. Risk 1 to 2% maximum per trade. This protects your account during losing streaks, so even 5-6 losses in a row won't kill you. 2. Set stop losses every time. Don't rely on hope. Hope is not a strategy. 3. Think long-term. Ask yourself, if I take 100 trades like this, will I still be profitable? That's how pros think. The truth is, trading isn't about making money fast. It's about staying alive long enough to let your edge play out. The traders who survive are the ones who respect risk above everything else. Think of it this way. The market is like an ocean. Risk management is your life jacket. Without it, you drown. With it, you stay afloat, even in the roughest storms. But here's the shocking part. Even traders who master risk management still fail. Why? Because they fall for the final, deadly mistake, the one that keeps them stuck in endless cycles, never reaching true consistency. Now we'll uncover it. The endless cycle. Why chasing the holy grail keeps traders broke. Here's the biggest lie in trading, that somewhere out there, a magic strategy exists that wins every time. Traders waste years chasing this fantasy, and it's the very reason they stay broke. Let's meet Chris. He started with moving averages. When that failed, he switched to RSI, then MACD, then Fibonacci, then scalping, then swing trading. Every time he hit a losing streak, he abandoned his system and went hunting for the next shiny indicator. Months turned into years. Chris spent more money on courses and strategies than he ever made in profits. He wasn't failing because his strategies didn't work. He was failing because he never stuck with one long enough to master it. That's the curse of the Holy Grail hunt. Here's the truth no one tells you. There is no perfect strategy. Every system has losing trades. Even the best hedge funds on Wall Street lose trades every single day. The difference? Professionals know their edge. They understand probabilities. They stick to one system and execute it with discipline. Beginners, on the other hand, abandon ship at the first sign of trouble. They never give themselves a chance to succeed. Think of it like going to the gym. If you quit after 2 weeks because you don't see abs, you'll never get results. Trading is the same. You only grow if you stay consistent, long enough to let the edge play out. Here's how to break free from the cycle. 1. Pick one strategy. Back-test it, forward-test it, and commit. 2. Accept losses. They are not failures. They're part of the game. 3. Track results over 50-100 trades. That's how you know if your system works, not from 1 or 2 outcomes. Consistency beats complexity. A simple, boring system executed with discipline will always outperform a flashy strategy abandoned halfway. The traders who win big aren't the ones who found magic. They're the ones who stopped searching and started mastering. If you can conquer this mistake, if you can silence the endless chase, you'll finally unlock what every trader wants, true consistency. And that's the real Holy Grail. So now you know. The 5 deadly mistakes that keep traders broke. 1. Trading without a plan. 2. Overtrading like an addict. 3. Letting fear and greed take over. 4. Bleeding out with poor risk management. 5. Chasing the mythical Holy Grail. If you can avoid these traps, you'll already be miles ahead of 90% of traders. And hey, if this video opened your eyes, smash that like button, drop a comment sharing which mistake hits you hardest, and hit subscribe so you never miss the powerful trading lessons I've got lined up for you. Your future as a trader starts with mastering discipline. So let's grow together.